Hi, everybody. Sorry for the delay in going live today. This is going to be a great workshop. The topic is benchmarks, goals, metrics, and ROI. Everything you need to know about measuring your trade show results. And this topic is kind of one that's been a long time coming. Uh, Obviously, there's a lot to do before you measure results in terms of developing your strategy and actually getting to trade shows and executing. But it doesn't seem like there's a better topic at year end than to talk about ROI, not only to take a look back and see how we did, but also to take a look forward and to see how we might improve what we're doing. So it's great to be with you today. For those that haven't been on our webinars before, we do have people from all over the country, and in fact, all over the world who have submitted questions. We'll certainly get to those. We appreciate all your questions. We also I've got some slides. I'm going to switch to those in just a moment. But I would just ask if you've got additional questions, please feel free to add them in the question area, or we can chat offline, whatever is easiest for you. So it's a pleasure to have you here today, and I'm going to get right to it. I'm going to switch over to my slides. This usually just takes me a moment, and we'll get you guys rocking and rolling here. So hopefully in just a moment you'll see my slides. And again, the goal is to chat about benchmarks, goals, metrics, and ROI. Everything you need to know about measuring trade show results. So I've got probably 35 or so minutes of content here, maybe 40 minutes, and then we'll hop into questions. So I'll look forward to any additional questions, and let's hop into this. So several of you responded to this note that we put in the marketing for this event, but it's been around for years. The sort of marketing manager saying, we know that 50% of marketing dollars are wasted. We just don't know which 50%. So that's kind of maybe a good place to start us today. And obviously the idea of measuring isn't just to spend the marketing dollars better, but it's actually to perform better. And you can spend marketing dollars better, but ultimately the company needs to generate revenue. It needs to generate revenue efficiently. And so we want to make sure that that trade shows are sort of optimized and maximizing how they can perform. So these are the questions that have been submitted. We've kind of pared down a bunch, and just those that were redundant, we pared down a bit, but try to leave them as much as possible in their original form. The light gray ones down at the bottom are a little bit out of the topic area, so we'll get to those if we can, but we're going to prioritize the ones that are in bright white. So our agenda is simple, setting the table, essentially talking about a little bit of background before we hop into the main topic. Then how do we define success? Obviously, you can't measure results until you know what sort of the optimal outcome is. We'll talk about some alternatives. We'll talk about an event cookbook, which is a heck of a tool, and I think there are versions of it that we end up developing for a lot of our clients that really help in this process. And then we'll talk about the future value. So you've measured, what can you do with that, and how can it actually change how you move your program forward and become more effective. And then again, we'll hop into your questions. Just so you know a little bit about me, not that this is about me or about us, but my name is Bill Kinney. I have a company that's called Meet, and we've got a great team that focuses on helping business-to-business growth companies effectively exhibit at trade shows and really leverage in-person events. So our kind of four pillars that we focus on are developing strategy. So we develop annual plans and actually augment and adjust those every quarter as we learn and evolve, and as the opportunities evolve and new events surface. We also provide staffing, booth staffing, and any type of event staffing. Then we also help the get the executives speaking opportunities. And finally, a whole bunch of sales support, everything from appointment setting for salespeople to doing a lot of competitive intelligence work. And it really depends on the client as to exactly what the exact program looks like, but very customizable. And our team altogether, we've got well over 100 years of event experience. And again, we don't produce events, but we help leverage existing events. And a lot of the companies we work with are offshore, coming to the U.S., and also many growth companies in the U.S. that are looking to expand here and overseas. So let's talk a little bit about the background and kind of, what are the sort of tools and components of measuring ROI and beginning to metric trade shows. So first, maybe kind of establishing why trade shows are important. And there are a lot of modes of marketing that many of us have. I apologize, I wasn't wearing my headset and probably not as loud as I could be. I should be much louder now, and I may re-record this for others. I'll take a listen to it, but just in case you didn't hear anything before, I'm now wearing my headset. It's kind of running too fast today here. But now we're on to why trade shows. And so trade shows are important really because they're the only form of B2B marketing that gets you in front of prospects. The challenge is that they're not labeled, right? If you're in an event with 10,000 or 50,000 people, unfortunately, no one went around and labeled the 100 or 200 that may be prospects for any given company. And just so we agree on what a prospect is, because we often find that people broaden the definition to their own peril. And so we define a prospect as a individual or company that has need, money, and they're urgent for the solution that you provide. If they don't satisfy sort of all three of those, then they're not a prospect today. They may be in a month, in a year, but they're not a prospect today. And we look at trade shows, particularly in exhibiting. The purpose of the exhibit is to identify the subset of attendees who are prospects, who have need, money, and are urgent. So it's we're kind of going to, as we go through this, narrow down how we work through this process, again, to make it more efficient. And of course, as we measure and we can improve our performance, we need to put in and use a variety of new techniques to create better performance. So why measure? So really kind of two thoughts here. One certainly is to inform decisions, and which is critical, not only what events we're going to do, but how we're going to do them, who we're going to take, what tools, what resources we're going to use, what messaging we're going to use. All those types of things are critically important to inform decisions. And then, kind of the old management adage, which is if you can't measure it, you can't manage it. And so, we have to have some mechanisms. Folks in their questions mentioned benchmarks. We have to have some mechanisms, some waypoints to be able to tell us how to improve what our performance is and how to improve it. And the kinds of measurements we're going to talk about, we'll talk about some that are absolute measurements. In other words, this is the result. And then we'll talk about others that are comparative, because ultimately, sort of abstract numbers aren't nearly as helpful as comparative numbers, where we can look at either an event against another event or an event against itself in a previous period. And so we want to make sure that we have the ability to have as many inputs, valuable inputs as possible. And sometimes when you're measuring things, when you begin, you don't know what will be most valuable at the beginning. And it isn't really until the numbers start to reveal themselves that you get a good sense of what of what numbers matter the most, and really how to measure them best. But starting really helps, and you get much better at it once you kind of build a system. And sometimes it's onerous, and so how do you make it so that it's easy to get the inputs, and that
the outputs are as valuable as they can be. So return on investment, pretty simple math calculation. I mean, this talk isn't really about the calculation itself. It's about the inputs, right? So return on investment, very simple. We look at the gains that are made less the costs over the cost. That gives you return on investment. So in other words, sort of what do we get for what it costs, or against what it costs, and then over what it costs would give us the return on the investment. So the sort of net or delta, the change on top, and then the costs on the bottom. So the easy kind of input here are the costs. I think everybody sort of gets that, right? You're going to have direct and indirect costs. You're going to have the hard costs and then the soft costs. And so you want to make sure that, you calculate those. We're going to spend most of our time, however, on the gain side, because that seems to be a lot more challenging for folks. There's a lot more different types of gains that you can look at. We may have different goals. There are certainly a variety of ways to measure the same goals. So a lot of what we're going to talk about today is really about the gains. But if you do have questions about costs, we can certainly talk offline more about that. But a lot of the confusion and a lot of the inefficiency seems to be much more on how do we quantify, what gains are important, and then two, how do we quantify them? And how do we quantify them in a simple way? So defining success, yeah, we're all going to define it maybe a bit different. It's important, and with each new client we have, we come up with success metrics, but it's going to be a bit unique for every organization. So what is success? Some it's cards collected, sort of, and you may see that more on the retail side, where it's a big darn numbers game. The number of quality prospects that are identified might be another measure of success. Another one might be the cost per lead or the cost per prospect. Also, media traffic generated. It might be social or other types of media. And then also revenue generated might be another one. There, we could list 100 different measures of success or what might make an event successful for a given organization. But the key here is to find yours and then begin, or you might have one or two or three, but begin setting up a process to measure against those. So cards collected. This is when we see people exhibited at events, and we're still going to events today that at least 10%, maybe even 30% in some of the events, people are doing giveaways that have absolutely nothing to do with their product or service. So in other words, if we do an iPad giveaway, which is kind of the most common giveaway, we're going to get business cards or contact information for people that have little relevance to what we sell, and so they're not prospects; they're just contacts. And so again, people are doing this. It's very natural and normal, but all you're doing. The best that you're getting is a subset of the attendees, not prospects, and so that is a bit of a challenge. And we've done a few webinars on this to sort of, for those that have questions on it, or we can talk offline. So what we look at quite a bit more is, and so hopefully this metaphor translates easily. So if you look globally, there are about 20,000 species of fish. And this particular depiction is just freshwater fish in America, not even globally. This is just freshwater fish, and I'm sure it's not even all of them. It's sort of a sampling, but a lot of these fish have subspecies as well. So the three things that are kind of that we work on, kind of most our big sort of keys to what we do are with our clients. We help them identify what fish they want to catch, because that's the first decision anyone that goes fishing makes is, what do I want to catch today? And that tells them where they're going to go fishing, and it tells them what bait they're going to use. And so really simply, we help our clients figure out what their target fish is, and we would call that a buyer persona, and it would be a specific subspecies ultimately that we want to catch. That then tells us where we're going to go, and it also tells us what bait we're going to use. Now, this is not perfect, it's an evolution, and this is why measurement becomes important, because we're not just measuring to see what our ROI is from events. We're actually measuring much more to see how our various techniques at that sort of our hypotheses are working. So in other words, do we have the right buyer persona? Is our messaging attracting them into the booth? And are they opting in based on whatever offer we make? So is our value proposition relevant to our target? Is our target correct? And then does the offer actually get them to give us their contact information so we can follow up, into whatever lead nurturing we're going to do with them. So we want to know who our prospect is. And so with that said, sort of the second way here is sort of to measure the number of quality prospects identified. So maybe you're looking for rainbow trout, and we're going to want to then measure trout that either stop into our booth or that opt in other words, give us their contact info. We also could measure the cost per lead, which is a really good and kind of normal thing to do. And we certainly, it's become very popularized online and a very effective measure as well. We could measure the media traffic generated, so how much exposure. So, certainly some of the challenges to that, for younger companies, those that are sort of scaling up as opposed to, sort of enterprise level, they are the media traffic generated is probably expensive as a measure, right? Because younger companies need traction, they need to generate revenue. Often they're funded by revenue, and so the idea of marketing as a branding tool is much different than marketing as a sales tool. And so usually with younger companies, there has to be more of a direct line. And that's more of the folks we work with are on that direct line between sort of marketing and actual sales or revenue generated. And then, of course, the last one here that we were going to chat about is revenue generated. And certainly as a measure, this is really good. One of the challenges of this is can often be a long time until revenue is generated, particularly if you're selling a more conceptual or high ticket product or service. You might have anywhere from 6 months to 3 years as a sales cycle, and waiting that long to know what the results from your event are problematic. And so, the easy one is, right, how many people stopped and we got their contact info. It gets a lot more challenging when you look at revenue generated, simply because of the distance, and also the challenge of linking those numbers to the event that happened some time ago. In other words, we closed the sale, 18 months later, and somehow that information gets back to the, to the event, so it can be appropriately assigned. And at some point you have to say it's done, so that we can actually, sort of measure this against some other events and make good decisions. So let's talk about our alternatives a little bit here. And so, I think in order to talk about the alternatives, we want to talk about the various variables or stages to a sale. And so, number one is we have to have some contact with the individual or some reference to them. Maybe it's either a list or we meet them at an event or whatever. Somehow we have some awareness of a contact. Then they become a prospect. And again, there has to be some qualifying that happens in order for them to go from maybe a suspect or a contact to a prospect. In other words, we have to establish that they have a need, they have money, and they are urgent in order for them to sort of then be qualified and to move to, if you will, step 2 here. Then the next measure or stage would be a first meeting. So we've gone from them being a prospect to a meeting. And I'm just these are sort of generic stages you may have other stages or some version of these, but this is just to sort of lay the groundwork. Next would be we give them a proposal, and again, our reference point is business to business sales, but the normal would be that there's some kind of proposal, and then there's a contract and or revenue begins flowing, and so that would normally be considered a close. And there may be intermediate steps here. There might be a presentation, there might be, you know, second and third meetings and so on, but these are kind of the big milestones that would happen. So to that initial awareness, they're qualified as a prospect, there's a first meeting that happens, and proposals, and then a contract. So there's a transition point here, and it'll be helpful if we talk about the difference between marketing and sales, or maybe where responsibility flows from marketing to sales. And again, this is all in the context of, you know, what do we really need as sort of the folks managing the event operation or the revenue or the results from events? When sort of our ownership done? Because generally the sort of event participation is under a marketing function, or it is at least thought of as marketing. And so when does it sort of transition from us to a sales function? And so this is a funnel that we developed a few years ago. It was really to think about this exact topic, is sort of what are the different types of marketing that we may use, and there are others beyond this, but, you know, thinking of those sort of initial awareness type marketings, everything from your website to advertising to social media to events and so on. Those are sort of the top of the funnel. In other words, initial awareness type marketing activities that would happen, and each of them has sub categories. And then as we go to and the real goal is to move, you know, through lead nurturing and through, you know, sort of continuous contact, to move a prospect through this marketing funnel to a place where they enough trust is created that they agree to a first meeting. And usually once that first meeting is created, they sort of leave. You know, the marketing still may have some contact, but it's much more on the sales side of the house to sort of run with it from there. In other words, that's when the prospect goes into the sales funnel, and sort of, you know, again, may still be nurtured, but they become much more of an active prospect than a passive prospect. And so, you know, they may participate in some of the middle of the funnel activities, but as they sort of transition through, enough trust gets generated. You know, obviously some fall out, but of those that are still in, enough trust gets generated that they agree to a first meeting. So this is all to say that, you know, that might be a really good measure, is and when you sort of think of, you know, what you can, you know, what's probably not too far in the distance that's a really good milestone that shows success, that you know, we know is some factor of and some variable of business that ultimately becomes closed, that becomes sold. And so we know maybe it takes 5 proposals to get a sale, you know, whatever that is. I'm sorry, 5 first meetings to get a sale. And so we know that with every 5 we get, we're going to get 1 sale. And it maybe sometimes it's 8, maybe sometimes it's 2, but on average, it takes 5 to get a sale, or whatever the right ratio is. But the point really here is it's important to know when an opportunity transitions from marketing to sales, so that we can use that transition point as an ultimate measure. And it, you know, it's probably one of those things where if we haven't gotten the opportunity for a first meeting in sort of the month or month and a half or 2 months after an event, it's probably not very likely to happen. So we can use that as a pretty good measure. And it's going to vary a little bit based on program, but if we come up with a standard, this isn't very hard to begin measuring and using very reliably as a way to begin measuring sales. So I'm going to share with you now an event cookbook, and I'm going to give you an offer, and that is for anyone that we have a follow-up conversation with, we will share with you this event cookbook, so or share a copy of it with you. But it's a pretty amazing tool. So I'm just going out of PowerPoint for a moment, and I'm going to go over to Google Docs here and share with you our event cookbook. And this looks different by client. I'm just going to walk through it fairly quickly. But essentially what we're looking to do is to quantify what's going on at, how our event is producing. So we're going to set, and you'll see at the top, we've got, I'm just going to use my cursor here. Whoops, where'd it go? There it is. We've got potential, we have two goals. One is in the booth, and the other one is salespeople. And I should explain that. So when we look at any kind of expo or trade show, trade fair, we see there are a variety of functions, but two primary functions: the activities that happen in the booth and the activities that salespeople do. And that's a challenge we see with a lot of companies, is often they have the salespeople in the booth, and we separate them out because we see that salespeople get an entirely higher level function and be much more productive out of the booth. And we actually have done a couple webinars on this, and you're welcome to listen to those, or we can talk offline. But in the booth, what we want to do is separate the average, or sort of the general attendee, from our prospect. If there are 10,000 attendees, we want to find the 100 that are prospects. And so we're going to use various techniques to do that, but we want people that are trained in and able to do that. Salespeople tend to have longer conversations, which isn't bad. It just shouldn't happen there. We want to get through, the goal in the booth is to get through as many of the attendees as is possible, and that's not going to happen if salespeople are having indiscriminate longer conversations with non-prospects. We want the booth really to be very effective at separating our prospects from the general attendee, and literally get through hundreds in the course of a day versus 10 and 20 and 30 like would happen if salespeople were in the booth. And again, we've got lots of material on that. The salespeople we want in one-on-one meetings. So that's why there are two separate goals here. In the booth, we want to identify $150,000 in potential business, and we want the salespeople to close $200,000 in business. And these are just, I just threw these numbers in for today. It's just, they're not based on anything. And certainly I wouldn't use them. That's not the idea. They're just examples. And the idea here is that salespeople are meeting with folks that are already in the pipeline, that are at the same event, because very efficient. You've all traveled in from various parts of the country or the globe, and a great time to get together. Folks that are already in the funnel probably already have proposals, and so on. This is using this trade show as an opportunity to close that business. We may want to also enroll some new partners, strategic partners, and so on. We also may want to do some secret shopping, some competitive intelligence. So that's why there are goals here under partner and competitor goal. So, but the idea, and I'm just going to scroll down this spreadsheet a little bit. So we've got some background information around the event length and number of people that'll be in the booth, and number of sales reps attending, the average revenue per customer, which it's funny, folks, a lot of our clients at first have a hard time with this, but it's really easy to calculate an average revenue per customer. You just look at your annual revenue and divide by the number of people that paid you, and it's just your average revenue per customer. We don't want to make it any more complicated. You might do it by product or division or whatever, but ultimately it's a pretty simple number to get to. Let's see, and then the number of prospects. So we've got a little information around the average, and sometimes these are estimates, and these are probably going to be created on the sales side of the house. These estimates will get much better over time, but how many prospects do we need to get an appointment? How many prospects prospect first appointments to create a proposal, and then how many proposals to a close. And again, these ratios are just examples. They're likely not yours. And then below that, the number of partner first appointments to a close, the number of executives attending, and folks that are doing the competitive intelligence work, how many of those are attending. And then we kind of go down to the results section. So each group will have its own goals. So this is in the booth, the exhibit goal is to generate 240 leads. Now think of how cool this is. We can actually tell, if you go halfway down here, we can tell each person how many leads they need to generate in a day. And the goal here, and this is, as we go through this, I'm saying it fairly quickly. Understand that the goal here isn't any leads. These are high quality, high probability that they're prospect type leads. So in other words, these are people, by how we've constructed our exhibit and what value proposition and offer we're using, these are high probability, high quality leads. And so this tells an individual they're going to need to generate 27 leads per day. And if we break that down, if they're in the booth for 6 hours, that's going to be 4 leads per hour per person. Now, again, not all of them be good. So, they might talk to 10 people or 15 people to get 4 good ones each hour, whatever that, ultimate math works out to. And again, these ratios aren't for any given client. These are just examples. And then we can actually record the results and generate the total number of leads or look at the total number of leads generated. We can also look at the appointments created. This is sort of entered 2 months later, and then get a cost per appointment, because we've entered up top here in the top right, we've entered the event costs. So what are the direct and what are the indirect costs? And again, these are just examples. And so it's the same information going down. So the sales, these are sales results. So it'd be the same kind of information, calculating how many appointments the reps are going to need. And again, over to the right, what the results were and what is the cost per dollar of revenue. So this is, another way to state this would be to say it's 14% for the dollars of revenue closed at the show. The nice thing about it is these costs are actually shared between, we're saying that they're full costs on each of these departments, if you will, but these costs are actually spread between the prospect generation or the meeting generation, let's say, and the revenue generation. So it's, these numbers are sort of, the results here are understating the value, but it's, again, what we're much more concerned about than the absolute number is the comparative number. And then we're going to look at the partners and again, similar stuff. And we're going to look at the competitive intelligence, and we can total all that up. And if we want, come up with numbers for the cost for the partners identified and some cost to the competitive intelligence. And we may go to some events that we just, sort of are focused on 1 or 2 of those components. Sometimes we'll walk through events and only be doing competitive intelligence or partner identification and partner meetings. And so there's a lot of different ways to do this. So again, happy to share this whole workbook with anybody that agrees to get together for a meeting, and we can do that in person, via Skype, all that kind of stuff, depending on where you are. So, so what's the future value of this? We've measured stuff, right? And actually, this is the best part of this topic, is actually, what can we do with this information? Because data, data is data, but we have a lot of opportunities to use this information. I mentioned up front, and I didn't make a slide on this, so I'm going to take just a moment and talk about it. Probably the most important thing we can do with this data is to measure results from event to like event. And we have some event to event comparison, which I'll share next, but like event to like event, and where we can actually look at three kind of primary elements of what we're doing when we exhibit. We're targeting a specific buyer persona. We're going to use some kind of value proposition, and we're going to use some kind of offer. Now, we're going to change those, and as we change those over time, we want to see what works and what doesn't. Again, just like somebody who fishes would look at catching fish, we're going to look at, what do we want to catch, and making sure we're in the right spot and that we're using the right bait to bring them in. And so making sure we understand those variables, making sure as we change different, have different constants and have different variables, that we understand what variables are making what changes in our results is probably the single biggest thing we can do with having good measurement. So next is sort of the event to event comparison, and this will be really cool. So imagine, let's just say these are the events we went to over, whether it's 6 or 12 months. So we've got, event XYZ, event purple, event NMO, event green, and so on. And these are all, various trade shows that we went to, just stupid names that I made up. And so we, and you may have different things that you measure, but this is just an example of what we might measure. How many leads did we generate, and what was our cost per appointment? And then what was the revenue generated on the sales side, and what was the cost of that revenue? So imagine at the end of that 6 or 12 months, being able to go back to the events that were in the bottom half below the red line in terms of performance, and being able to talk to the event host and share these results with them, is to say, hey, we want to keep doing your event. We've identified that our buyers are here, but for some reason, your event isn't producing at the level that our top events are. And I would share this information with them. And it may be, you may have different sort of things that you find it important to measure, but ultimately to be able to share with them how their event is performing relative to your best performers. And really, there are only two things that can change here to improve your results. It's either going to be the gains that you get, or it's going to be the cost of the event. And maybe it's a combination of the two, but maybe they can put you in a better position, a better spot on the floor. Maybe there can be some pre and post event promotion that would happen. Maybe there's various partners that they can introduce you to who there's some collaboration with, or maybe some hospitality event. All sorts of things can happen. But again, you don't really care. What you care about is that the event performs better. And, not only are you going to do things internally to improve your performance in terms of your value proposition and your targeting and your offer and so on, but you want to utilize your event host to do the same thing. And so how do we help them help us? And quite often, as someone who's been an event host, quite often when people stop going to your event, they can't tell you why. And so it makes it really hard to create a situation where they would continue doing your event, because there's not a lot of basis for the decision making, other than kind of the most common thing we hear from companies that we begin working with is, well, we've always done that event. Well, that may not be a reason to continue doing it. So event-to-event comparison, sort of that annual or periodic comparison of all the events you've done versus each other. Now, of course, the other way to look at it is sort of the year-to-year or period-to-period comparison, where we're looking at the exact same event XYZ, just different years. So 2018 was a little better performing than 17, and a little better performing than 15, and then finally 16 being at the bottom. And we obviously want to look at this to see, what did we do different? Were there things about the event that were different? Were there things about what we did that were different? And sort of evolving what we do to perform better at the same event year over year, because there is some value in exhibiting at the same events year over year, because you build a relationship with that community. Maybe we also get opportunities to speak. Maybe again, we could do some hospitalities. There are all sorts of things that we can take advantage of, and as we invest deeper into a community, and it takes sort of multiple exposures in some cases, and sometimes we're reminding people that we're there, and being there at the time at which we're a critical sort of part of what they need is sort of all part of this. So let's go back to the kind of where we started, which is to why measure. So we want to, number one, be much more intelligent in the decisions we make. We want to adjust our strategies based on substance. And we also want to make decisions and help the marketplace evolve to our needs by being very direct in how we can inform them and how they're performing versus our other modes of marketing. And again, if we can't measure it, we can't manage it. And imagine being able to go to your booth team and saying, hey, as we go to this event next week, let's work through the math a bit here, but we're all going to, everybody that's going to be in the booth, we're going to need to come away each day with 27 quality leads, or whatever the number is. And also the same thing with the salespeople. And so, you can have situations where you can have a lot less manager engagement because everybody knows what to do. And the problem a lot of times is managers can't leave the booth because they're sort of keeping all the Indians going. But if everybody can be a lot more responsible because they've got specific goals, and again, focus is on quality here, not quantity. But if we don't know a target, we're never going to know when we're successful. And we want to know what we've created here, what it has a probability to yield when we come back. And if it doesn't create the number of appointments we're expecting, and those appointments don't create the number of sales we're expecting, then there's some disconnects in the process. But ultimately, marketing is sort of done for the most part once the first appointment is agreed to. It's almost like the resume is to the job interview or somebody getting hired. The resume is, you need it until somebody agrees to meet with you. After that, once you get that first appointment, man, the resume is barely looked at. And so it's really about getting us to that place of agreement for that first appointment. So we're going to hop off here in just a second, and we'll get to your questions. I just want to share our contact info for anyone that would like to touch base after. Of course, we'll send a follow-up note and send this recording. Again, making sure that it is a good recording with me not wearing my headset at the beginning. But either way, by tomorrow, you'll have an email from me with that information. So I'm going to come back on screen here, and we can go through the questions. So let's see. I'm just going to put them up here on my keyboard. So the first question is: we set SMART goals. We set SMART goals pre-event and discuss outcomes post and assess qualitative results. But because follow-up and utilization of CRM is inconsistent, it's tough to get quantitative data and consistent reporting across all of our events. Totally understood. And again, the sort of simpler and different organizations will have different sort of challenges or opportunities in this regard. And but you have to find the things, and we're happy to sort of brainstorm through with any given organization, but you have to find the things that you can measure fairly easily and that they're not too far from the event. In other words, that's when I talked about measuring the number of first appointments that are created. That's why is a first appointment, again, should be, if it's going to be agreed to by a prospect, it should be agreed to within a month or maybe 45 days from whatever the event was, and quite often it's within the first week or two. So just deciding, okay, we're going to sort of close these measurements at this time, but once that first appointment is had, it's really, it's much more of a sales, sort of opportunity than a continued marketing opportunity. Let's see. I need baseline info on how to measure event ROI. I've never had to measure trade show ROI before, because in my previous life with a Fortune 500, we did trade shows for awareness only. Now that I'm with a startup, we can't afford to do that. So yeah, clearly a much different focus when you're certainly with a large enterprise. Much more about branding, much more about media attention. Yeah, startups, scale-ups, mid-sized companies are much more pragmatic about what they need is in terms of results from a trade show or an in-person event, and it's really much more about generating appointments, generating sales, and again moving on. And so yeah, utilize what we've talked about today, and begin looking at things that are easy to get, that you directly have responsibility for, and then once it transitions over to the sales team, that should be something that they monitor and measure, and if it someday can be related back to the sort of the cost, but ultimately there are a lot of other costs that go into the final sale, but the cost to get either a qualified prospect or the cost to get a first appointment, much easier, much more directly related to the efforts that you would do in marketing and around a trade show. Let's see, want to learn more about how to measure ROI in general? I think we satisfied that. What is really the ROI of a trade show? Okay, I think we talked about that. How do you assess a show that you missed all the measured target goals but landed one big massive sale? And again, you could relate that to if you have a way to easily measure and sales happen within a reasonably short amount of time, you could measure that back to revenue. But I guess my experience with most B2B enterprises is it takes a minimum of 6 months and maybe more, like a year, maybe is even up to 2 or 3 years, to be able to understand the results of it, or the sales results of a trade show, or of that prospect that was generated. And so it may be impractical most of the time to wait that long to know how you did. And again, why I would suggest looking at the number of first appointments generated. Let's see, just making sure I don't skip one here. How do we know if our materials and presence at the trade show were effective? And then parenthetically, simply, if we aren't receiving subscriptions. So yeah, that's a perfect question, and why having metrics are so important, because you want to be able to compare what you do at one event to another. So you may have heard of A/B testing before. So an easy way to do this, for example, would be, and we do this very regularly at even one-day events, is we'll go in with two different sort of marketing strategies, and it may be that we have the same buyer persona, but we change the other elements. But more often than not, we'll go in with the specific buyer persona we're targeting in the morning, and a value proposition for them, and an offer for them. And then in the afternoon, when everybody's at lunch, we switch out the booth, and we're targeting maybe a different buyer persona, and then a unique value proposition for them, and a specific offer for them. Or we'll keep the buyer persona consistent and just switch the value prop and offer. And again, A/B testing, you can do lots of ways, but the idea being, what quality and quantity of appointments get generated from those two strategies, and the ability. And we're not going to take a specific event as the only data input for that. We have to sort of check our math by, if we're going to test over the course of 2 or 3 months, we're going to test maybe 6 or 7 things. Then we'll double check that to take sort of the higher performers and compare them against each other. But we'll continue to test these ideas for the rest of our time in marketing. And ultimately, because the marketplace shifts, the product gets better. There are all sorts of things that evolve. But yeah, having and testing your materials, testing your marketing communications, critically important all the time. Just keep doing it. Use A/B testing to compare, and again, measure the results. And you can use codes if people are subscribing or maybe signing up for a webinar or whatever your offer happens to be. You can use codes to easily identify who's opting in and what they're opting into. Want a different perspective on determining ROI of the show. So I think we've done that. How do you track your trade show success when you aren't selling physical products at the trade show? Great question. So yeah, no, we would definitely advocate, with intangibles, it's very much the same process. Again, assuming that the result you want from meeting a new prospect is to actually have a scheduled meeting, whether that's in person or via Skype. But the idea being that, when somebody becomes a prospect, they don't, sort of immediately buy, which happens in most B2B situations. It takes a meeting, it takes a proposal or a quote, and then it may take many other steps, and then somebody becomes a customer. But there's usually at least those steps. So ultimately, it's really the same thing whether we're selling something physical or not. I think the mistake, and maybe what this question is getting to, and the mistake we see a lot of people make in their booth communication, in other words, what they present sort of behind them in the background, much more of what we see people promoting, and quite often it's not even very clear what they do, but or even what their company is, but what we see is companies sort of pushing information out as opposed to pulling people in. So in other words, what I mean is people talking it through their communication about what they do as opposed to what problem they solve. And so making it really clear, and what gets people to opt in more often than not is when they realize that you solve something that they have. So if we understand if we have a sort of hypothetical buyer persona and we understand what's keeping them up at night, then having that, when we think about how do we, if we don't sell a physical product, being and actually selling a physical product is dangerous because people tend to have the product, and they're promoting the product as opposed to promoting the problem. And we want to promote the problem because we want people, that's empathic. People should know that we hear them and we hear what they're challenged by, and they're drawn in because they feel that we can help them with the problem. And so we're going to use various techniques, various baits to empathize and to help people opt in to just sort of leave the stream that is the aisle and come into the booth, just like we would with a fish, right? We want them to sort of turn in and opt into our booth. So just checking my questions here. Let's see. I think okay, that's redundant. Yeah, the rest are just related to ROI. So I'm going to get to the three questions that were kind of off topic, and we've got just a couple minutes, and I'll see if I can hit them real quick. So what is the best strategy to secure a quick 30-minute one-on-one meeting at an event? Yeah, so I think it's if we've done the right job in the booth, and we would want the salespeople to mostly have preset one-on-one meetings, but in the rare occasion that somebody is discovered through the booth process who is a prospect, in other words, has need, money, and they're urgent, they can jump the steps, right? They go, if we think of the marketing funnel, they're going to go from awareness to trust, at least trust enough to have a one-on-one appointment really quickly. It's going to happen in a matter of moments. And they may have come into the event with sort of this with this goal to meet somebody who could solve this problem, and that will certainly happen. So we would just set an appointment with them, with one of the salespeople who, hopefully we have their schedule so we can easily pop in additional appointments for the sales folks. But yeah, easy enough to do. But again, we want to use that opt-in process. And again, the maybe easier way to imagine it is, right now, most people that exhibit have somebody in the aisle sort of guiding people into the booth, pulling them in, right? So think of that like almost having a net in the water where you're trying to catch anything that's swimming. What we want is a situation where we've got a hook in the water with a piece of bait on it, and we want most fish to swim by. That's really the goal. We only want the fish, that is interested in this bait to stop. Everyone else, the goal is to swim by. It's easy when you're fishing because you don't see all the fish that swim by. But at a trade show, it's a little bit unnerving because you see all these fish swimming by, and it's okay because you don't have to waste your time talking to people that don't have a need, don't have money, and aren't urgent. We want to use techniques that will do that. So again, if people are opting in based on the bait that we're offering and they're urgent, then we may want to bypass our normal lead nurturing process and get them right into an appointment, which it will happen some small percentage of the time, and that's totally cool, and actually great. And so let's see, we recently launched a new data tool. How can we promote our tool without sounding too salesy? Again, focus on the problem. Don't focus on your tool. The tools, you never ask a carpenter what kind of hammer they use. You ask them, what's your history of doing this, maybe? Tell me about the results I should expect. Tell me what my house will look like. Tell me what I'll be able to do with my house. But you really could care less about the actual hammer or any of that, or any of their other tools. So, and then the last question here is the best way to follow up. I think the first is immediate. Speed is the most important. Every lead you generate is perishable, and as time evolves, just like fruit on the fruit stand, they go away. So I think speed, and then compassion. Be interested in the person on the other end that you're following up with, and I think that works pretty well. But we're just at the hour now, and we're all in different time zones. For me, it's 1 in the afternoon. But I hope this was helpful for you. We will follow up. And again, I'm going to check the sound quality. I do apologize that I didn't have the headset on at first. I got a little discombobulated. YouTube has sort of changed the login, so it took me an extra couple minutes to get on. But it's been a real pleasure to be with you today. If I do need to re-record, it'll be you'll have this by tomorrow morning. If I don't, you'll have it this afternoon. But certainly looking forward to chatting with anybody offline. I didn't see any other questions. If there were, I apologize. I will get to those after if I do see some come in. But I hope we do have a chance to chat, and certainly wish you great success as you not only close the new year, but go into as you close 2018, but as you go into 2019, wish you much success there, and certainly let us know how we can help. Thank you. Have a great rest of your day. Bye now.